So today we're going to talk about finances. We're talking about what the heck we're doing to get our life together, right? And today we're joined with Fan. Fan, why don't you do me a favor and introduce yourself?
Hey, my name is Fan.
And it's interesting, right? Because we kind of revolve in similar circles, right? For me, I deal with well, not really on the financial planning side, right? It has been a real big interest for me. For work, I'm working on the R&D tax credit, but also we work with tax advisory, right? Like so that ultimately trickles into those folks who handle financial planning, succession planning, estate planning, all of the things that revolve around finances and that things that help people remain or get wealthy, right? So where do you fit in that little equation?
So I'm a financial planner. I would say I plan for everything that people should be doing. I don't file for tax for people. I plan for what to do January through December. And then tax filer probably comes in the April coming around, right? So we do the planning and we give advice. And should people listen to us, we implement them. That's what we do.
And before we go any further, for folks out there who don't really know how all this stuff works, let's put some disclaimers here, right? I am a CPA. I am not your CPA. She is a financial planner. She is not your financial planner. This is not personalized financial advice. Do your own due diligence. Talk to your own professionals, right, and all that jazz, right? Don't listen to some random people on YouTube or wherever the hell you're listening to this. Please, 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 right? So this is just how we view things, our opinions, and all that jazz. But again, not personal advice for you. Okay, so inevitably, I feel like we have to put those things in because somewhere down the line, they're gonna say, "Hey, well, I also saw this on TikTok. I also saw this on Instagram. I also saw." Yeah, great. Well, I mean, are you gonna bet your life on that? Do you know them? Right? What credentials do they have? Who do they work with? Right? So this is the same principle, right? So please, 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 let's use common sense. Now, it is end of year, right? And me myself, I'm also trying to advise. Like I work with CPAs, right, who have taxpayer clients. I also work with companies themselves. They are actually our clients, right? All that jazz. Now, as the year end is here, we ourselves are also telling them, hey, there are some things, especially with the passing of this new bill, as of July, that you guys need to start preparing for, right? So that you guys have things done on time. But more commonly, on the personal end, this is where if you have tax considerations, you should really start getting them lined up. Well, you should have gotten lined up already, but we are where we are,
Yeah.
right? So,
Yeah.
Are there certain things that you commonly find as the year ends for your clients or potential clients where you're saying, hey, like let's go through this checklist?
Yeah, I would say people probably have about 20 days left, including the weekends, right, to get the year-end stuff done. Because by 25th, Christmas time, institutions are so overwhelmed and they're probably not working, unfortunately, because they are, they deserve vacations too. So a few things, maybe number one, Roth conversion, right? I think that's a big thing for people who are aware of Roth accounts. Do the Roth conversion before December 31st, not until April 15th of next year. I think that's a common misunderstanding that people have. People are like, oh, I have time until next year, April, to like put in my $8,000 or whatever. But the truth is, you gotta get it done for the conversion for this year, right? To be counting towards 2025. That's number one. Number two, I would say if you need to do any charitable contribution, get it done before December 31st. That's another big thing. Contact your church, let them know about your intentions, donor advised funds, things like that. It's all good stuff, but make sure you take advantage of it this year. The third thing I would say would be review your portfolio, right? I think people probably heard about tax loss harvesting, right? It's a big keyword for people who have portfolios. For sure, do that before December 31st. Historically speaking, right, people call this month Santa Claus rally in the stock market, meaning that this month is usually relatively smooth, right, for trading purpose, right, because there are more holidays and trading days are shorter, this and that. But that being said, this would be a good month to just always review your loss positions so that you can harvest your loss. And then lastly, I would say absolutely, just look through all your taxable accounts, your 401ks, your contributions for tax advantage accounts as well, making sure that whatever money that you can put in for this year, just get it done. Don't delay until next year. That would be some actionable items that people should do.
That is a laundry list if I ever did hear one. But I mean, this is the thing, right? There have been some changes. So for those who are kind of focusing in on optimizing their retirement, right? At this point, if anyone still thinks that relying on Social Security is going to be the way to go, I'm sorry, you really, 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 really need to crawl out of that cave. Okay? There's no realm of reality where a decent quality of life is going to be tied with taking only Social Security, right? And unfortunately, I think our parents' generations there's still a lot of folks there who says, "Oh, well, I don't need that much. I'm just going to, I don't need these millions of dollars. I'm not trying to be greedy. You stop being greedy. Social Security will take care of everything." Mm-hmm. I'm here to tell you that is not the case, and especially for those who think they are good. Hey, I have 3 houses. I have my 401k. I have my pension plan from when I worked at that company in the 40s and 50s and 60s and 70s, whatever. There are more and more situations now where, from my standpoint, right? So generally speaking, for the last 10 years, people are swearing that the silver tsunami is going to come and suddenly there's going to be a big wave of this, that, and third. Okay, so where are the houses? Where's this big influx of wealth that hit the markets? It didn't. You know why? Because if you were looking at a lot of people who are retaining the wealth, whether it be the boomers, the older millennials, Gen X, whatever, if you're looking at, like, let's say the boomers who have maybe accumulated a lot of this wealth, houses, stocks, all these, well, they're the millennial or Gen X. Let's start with the Gen X, right? Like this for me was interesting, right? Like they're thinking, oh, they're gonna sell these houses and go into the market, or it's gonna go to their Gen X kids, and suddenly they're gonna put it in the market. No, because the Gen X kids are now at retirement age. What is the typical quintessential thing that people who are elderly do? They don't risk anything. They don't want to lose anything. So if you think that suddenly they're going to say, hey, I'm going to go sell off and make these 8, 9, 10, 12, 13 million dollars and live on a beach somewhere. No, I'm sorry. That's not how that works. Now, the unfortunate side is the other side of what I'm seeing is that a lot of folks are now going into elder care, right? They're going to nursing homes. They're going to assisted living. They're going all this, that, and a third. And they're realizing, hey, the ones that's covered by just strictly like Medicare, Medicaid, right? I don't actually like this situation. I don't like this at all. I worked hard my whole life and whatever. And if it goes into a nursing home and like more intensive care, what we're starting to see a bigger trend of is, hey, you have properties, right? Well, what if we are to say, use that as collateral to offset the cost of these services? So where is that house going? It's not going to your kids. It's not going to your grandkids. It's not going in the market. It's going, right? Like, well, in the market in a way, but not in the way that you thought. Right? Mm-hmm. So I'm sorry for this big soapbox moment, but it's for me to say, for me, I would rather plan to have more than I think I need. Shame on me. I'm going to be honest. Shame on me because, like, honestly, most of my money has gone to anything but my retirement. Right? But for folks out there who think, hey, if I just do that 4% employer match, right? Well, if you're a solopreneur, then that's a whole different ball game, right? But I'm going to do the bare minimum and think that's the only thing that I will need. I'm sorry. You're probably in a big pile of doo-doo, right?
Right.
So for me, my first step is understand where you are. This is a long way of asking. How often do people call you to at least get an assessment of like, hey, I just need to understand where I stand?
Mm-hmm. Yeah. To be honest, people just don't get to it. Like, the fact is, if someone come to me and be like, hey, can you help me to understand my financial situation? They're already winning this whole game. I think 80% of people out there, they just don't want to know. Or they feel like if they don't know and they just work really hard, they'll just be there for some reason. right? Like coming from a Chinese American background, right? Like a Chinese background, I would tell you that Asian people, they don't believe in plan. They just believe in make the money and save the money. So, like, I think 10 years ago, when I was at Merrill Lynch, for example, when I mentioned about financial planning to people, people thought it was a joke, right? Like, my Asian, like, clients, they're like, I don't plan, man. Like, I just invest. Can you tell me, like, if I should buy Tesla or not, right? That's usually the general understanding of things. Nowadays, I think more people really understand financial planning and understanding, like you said, Alex, like understanding where you are today is really the most essential step. And most of the time, people don't really get to it. Yeah. So going back to what you said, one thing that I think is really interesting is that you mentioned about Social Security. Social Security was a product of the Great Depression, but it was never meant for long term. It wasn't a long-term strategy. It was a, very temporary solution to the fact that people were just starving. It just, because I came from a different country, then, got involved with this country, and then eventually, I did become a citizen. So I do love this country, but I do have to say that it's really interesting to see, unfortunately, a broken financial system where, like, it was a temporary solution that brought to people, and now people just rely on it. So, yeah, like, there are things that we all could do to make our finance better, like, including myself. Like, for real, I should count my hands for all the Starbucks that I buy on a daily basis, right? But, understanding where we are at this moment is probably the most important thing for people.
And let's talk about the type of clients that you typically onboard. I mean, I do understand that you guys pretty much have a fairly full client book, so to speak, right? But, if you were to say, you know what, I still do want to have a call scheduled with Fan and her team. Like, typically, what does that client look like for you?
Anyone who wants to understand where their finance stands should come and talk to us, right? So we, as a team, we bring about, I would say, 5 client households a year into the practice. That's actually a lot, by the way. Because we do have many financial planners, and for the new households, we have different advisor responsible for different age or asset, right? What that means is that, for example, if someone who's in their 20s, 30s, very beginning of their career, they just want to understand where they are and what they should be doing in terms of taking advantage of their 401k and stuff like that, we have a CFP, Certified Financial Planner, who's responsible for that sector of clients. When they come in, we will do a complimentary consultation for them, and then we're going to be able to craft a financial plan for them. They will exactly know what they need to do. Could it be something like budgeting? Could be something like cash flow management, understanding daily spending, student loan for someone like that. Then, of course, you have people who have probably already been working for a while, saved up some money. Say they have $500,000, even over $1 million, right? They are in the corporate world. They want to get even further. For those people, then, we have another CFP who would be responsible for that sector of clients. With that folk, we're going to do an overall financial planning, tax planning, understanding what we can do for them. And then, they go to this particular advisor. And then, of course, you have people who have multi-millions, right? And those people would go to a different sector. So anyone who wants to understand what they're doing, or maybe they have doubts about their current advisory team. If the current team is not providing estate planning, for example, the person doesn't have a will, doesn't have a functional trust, something like that, and then the team is not providing real tax advice, for example, no money was saved from tax review sessions, or maybe they don't even have tax reviewing sessions on a yearly basis, then they really should come and talk to us.
Okay. And this is going to ruffle feathers. This is going to absolutely ruffle feathers, because I will always tell folks that you have a team, or if you don't, you should get one. And I think a lot of people, when they say you go speak to your team, they're like, I don't own that kind of business. I'm like, understand something. If you have more than a W-2 and a basic, Jesus Christ.
1099?
401k, like if you don't have like anything beyond that simple 1099, simple W-2 and like a 401k, you should buy, especially if you're running businesses, if you're running different kinds of investments, you might want to seriously consider talking to a CPA. For instance, if you're running a business, you should probably have a business attorney at the very least in your back pocket, right? If you're looking at high net worth, you should have these professionals. Are they your employees? No. But are you paying them to work for you? Yes, you are. So for me, that is your team. And a financial planner is part of that team, right? Now, for me, there's always going to be a back and forth because the common thing here is that the attorney doesn't like what the CPA did because what's good legally isn't always good on a tax basis, right? Now, on the other side of it, you have a financial planner talking about all this, that, and a third, and the tax attorney or tax person might not agree with that. Either which way, right? Because I know this happens time and time again, and people are always going to cry about this. Your best thing you could do is, guess what? They're part of your team. Do yourself a favor rather than you playing telephone and going back and forth saying, hey, my tax person said this, my financial planner said this, my attorney said this. Guess what? Why don't you get them aligned? You're a manager now. Congratulations, right? Now, for me, I imagine there are going to be cases where they're going to say, hey, fan, like the plan sounds great. I talked to my CPA. They don't like it, right? Now, for me, it's going to be as simple as, hey, like, just go look up the tax code. Right? Like, what does the tax code say? Before we get to any arguments, let's just look at what the tax code says. Are there legal precedents? So I'm not going to bore the audience with all that jazz. The answer is usually simple if you just look up black and white code, right? I'm just going to leave it there. But I do recognize that oftentimes I think people forget that most tax preparers do not tax plan.
Mm-hmm.
Okay,
wow,
it is. I mean, for me, look, look, I'm gonna be that guy. Like you could be my cousin, you could be my friend. Like I don't care. I'm gonna call it what it is, right? You might hate me for it, but do better, right? Now, to be fair, there is a growing community that is realizing that the real value is in tax planning, but I would still say it's like single digits from a tax prep perspective, right? So you guys figure out how that works. Figure out how you want to align your teams, but please don't forget that it's still you. Like, it's your financial planner, it's your tax preparer, it is your attorney. They have to work in your best interest, hopefully, right? If they don't, fire them, please, right?
Yeah.
Now, if you are in a situation where, let me give you a hypothetical, right? So this person has signed off for 3 or to 5 different life insurance, different insurance policies. Mm-hmm. We have, let's say, for the last 10 years, it was just 4% on a 401k employer match situation, and that's all I got, man. And let's call him. Let's say Bob is 35 years old. In this particular case, he's let's make this interesting. Let's make this interesting. Mm-hmm. Let's make this very interesting. Let's assume that Bob is making $200,000 a year. Mm-hmm. Bob makes $200,000 a year, and he's most likely going to be inheriting something like a $1 million estate in the next 5 years. Mm-hmm. Right? Grandma's not doing well. Mom and dad is not doing well. I don't care who it is. Right? I know it's morbid. I know it's dark, guys, but this is reality, right? Mm-hmm. And Bob knows for a fact that there is a pretty good windfall headed his way. He still has, let's call it $30,000 of credit card debt, mm-hmm. right? Let's call it $100,000 of student loans, mm-hmm. right? Not to be fair, I'm not expecting you to have a full plan because that's not fair. That is not fair. That is not fair, right? And for anyone out there, if someone's going to give you an immediate answer, that's a problem, okay? But in a situation like this, right? Are there immediate red flags, or are there some immediate questions that you would want to know, mm-hmm. or like someone at least, or maybe like if I'm Bob, is there something that I should be like, hey, what are your thoughts in this initial mm-hmm. scenario?
Yeah. Oh, I love this. This is so real. Like Bob is so real. I love it. I mean, first of all, Bob is doing a great job. Making $200K at age of 35, that's amazing, right? Mm-hmm. I don't know if Bob is married or not. I would assume he's not, only because if he's able to make that money and then owning that much of insurance policies, he's probably putting all his income into that insurance policies, right? Which is a problem. That's number one red flag is that, like, I think a lot of people confuse insurance policies with investments. Like, you heard of like IUL, guaranteed income, but at the same time, like some type of investment opportunity, right? I'm sorry, but I hate them. I just hate them because it sounds too good to be true, and it is too good to be true. If something's like, oh, it guarantees you the return, and then it gives you like the investment return of the market, that's just impossible. Like, I don't know. Since age of 10, I know when something's too good to be true is absolutely a fraud. So yeah, number one, Bob, please get yourself out of those policies. If you have someone you care about, like get a term policy assuring like, I don't know, like $2 million. But then at the same time, you're paying like, I don't know, $20 a month, right? Because you're 35 and you're healthy. That's number one. Number two, I would say, I think it's good to have student loans, but take a look at the interest rate. Maybe do some type of refi, right? Because 200K of income, there's no way you're gonna get a waiver on your student loan. So might as well just refi as soon as possible, right? The third thing I would say, if your income is really 200K, 4% in your 401K is definitely not enough. I would tell you 8%. I might even tell you to do 10%. Right? If you're reducing your insurance policy payments, maybe make it 10%, literally starting from now. And then if you're getting inheritance, you probably want to talk to your parents about, do they have a will? Do they have something set up already? A mill, assets, you don't really need a trust or anything like such just yet. Just have a basic will. You can literally go on like will.com, right? I don't know if that's a legit website. This is not a promotion. I'm just saying that go on like LegalZoom or something like that, and then get a basic will for your parents, and then make sure that you can fund it. And that's pretty much it. I mean, I don't think there's anything bad about it. I think Bob is doing an amazing job, 200K. Already invested with 401K and insurance policies. Just get out of the things that's not worth your time and money. Hire a financial planner. At least have them do the financial plan for you, and then let them give you the whole recommendation before you engage with the team, right? So just do that. That sounds great.
Well, I mean, you're nicer than I am. For me, for starters, I'm like, Bobby. Bobby. What's her name? Who sold you those policies? Who were you dating at the time? Right? What college frat bro were you trying to help out because, they were living on someone's futon? Like, who are you helping, bud? Who are you? Right? I mean, it gets interesting, right? Now, for me personally, I would admittedly, I don't know at what point is it worth it, right? But I would probably say yes to the will, but I would still want to generally push them towards having an evaluation to see if it's worth getting a revocable living trust. Only for me, I've seen too many things go sideways in terms of probate, right? And so, like, unfortunately, like, it just turns into one of the things where, like, the will handle a lot of things. The probate will add way too many levels of complexity that you just don't want to deal with, right? And for me, and again, not legal advice, not personal advice. Go speak to an attorney. Go figure this out yourself, right? But generally, for us, we're in that realm of, look, I don't want to deal with that. And if I were to pass, like, God forbid, I do some stupid like jaywalking, I get clipped, right? But it's just one of those things. Like, I don't want them to have to deal now. My family to now have to deal with another thing, right? And one of the things that I've learned from an attorney was that, we have this misunderstanding of what we think we have, right? There's in this country, there's always a default, right? So, for instance, you think that you don't want to get a prenup because you feel icky about it. Guess what? You already have one. By default, you have one. The government decides, not you, right? You think you have a will, and the will is everything. Guess what? If you don't have a trust, or if you don't have a set plan that you legally designate and plan for, guess what? The government has one for you by default, and it is a nightmare. It is a nightmare. So, guys, do me a favor. don't assume that someone's going to take care of you. The government will take care of it, and it's not in a pretty way, right? So there's a little bit of that. So that's my little rant. But yeah, I mean, I like it, right? I mean, from a more complex tax situation, just for the nerds out there, I might want to figure out, hey, like, what's that health insurance policy that you're signing up for? Is it a high deductible plan? Does it make sense? Because just because it's available doesn't always make it useful to you, right? So again, not personal tax advice, please, guys. Like I'm doing this because like I've seen way too many Instagram shorts and like all these people like you could do all these things and turn into a trillionaire. Shut up. Yes, you can, but there's caveats. So HSAs, can they help? Yes. Is it interesting? Yes. Will it always be helpful? Not always. Depends on your situation, right? For me, my quick and dirty will be: is your 401k maxed? Does it make sense for you to have a Roth or self-directed Roth if you're a little extra nerdy, right? For me, does an HSA make sense, right? So for those who don't know, the HSA portion of it is interesting because yes, it's tax-free going in, and as long as it's qualified expenditures, it's tax-free going out. Now, if you don't use it, right? So like again, if you have little co-pays, just pay for it out of pocket. When it goes in your later years, if you end up don't use it, well, guess what? There's another benefit there. Me personally, lately, I'm now becoming a fan of the 529s. Me personally, well, I have kids now, right? So for me, it's one of those things where you set up these 529s, and the beauty of it here is you can always change the beneficiary, right? So there are more folks out there who either started it throughout their own years, or they figured, hey, sooner or later I will have a family and kids or something. So they have one for themselves. And if, look, worst comes to worst, I'll go back to school, get my executive MBA or whatever. But I want to have kids, right? So what some people are planning to do is, hey, like I just change the beneficiary from myself to my kid, and so on and so forth. Now, if you don't, and the beauty thing here now is also, hey, if you want to go to private school, it is now eligible. So now if I want to send Johnny not to a public school in the hood, if I want to take him to a private school, guess what? I might be able to use those funds. The other side here that most people forget is room and board for colleges may qualify. May qualify. There's checks and bells and whistles you have to check into it. Now, beauty thing for me, Secure 2.0. The government understands that they are horrendous with you just can't trust them with your stuff. They understand that. They're not good at it. So they want you to do better in terms of your retirement. They're adding more incentives for you to do better for your retirement. Now, the 529, if you don't use it, what is it, $35,000 a one-time conversion penalty free? That's a win. That's a win. I mean, look, it's not $1 million lotto ticket, right? But for me, it's like every little thing helps. So there's my little tax nerd what ifs checklist, right? But
That's great.
it's I hated this as a kid. I thought this was the most boring, painful thing that I would never want to do.
Financial planning or tax?
Any of it.
Because I
it was interesting enough. I tax for me, throughout my whole process, people used to tell me, oh, it's very important. This is how like rich people like don't spend extra money, and like the government won't come after it. I was like, that's okay, fine, that's great. But like I read through this tax code and I want to gouge my eyes out. I hate this. It's the worst thing ever. And it wasn't until I was much older that like once I started seeing it in play, and I was like, oh, this is crazy town. What? Like, wait, hold on. Like so there are people out there who are paying nothing in taxes and they're making absurd levels of money legally, and like there's no I'm gonna call it out. Like a lot of people in our community, especially our parents' generations, what did they do? They dealt with cash. A lot of the cash went under the table, and that bought stuff that because one way or another, like for instance, there was a big community for us where they just didn't trust the government. They didn't trust that, right? And they were like, hey, what is this tax thing that you guys are making us pay for? What am I getting? Like all I see is like all the discrimination and all this stuff that we dealt with. Under the mattress it goes, right? I'm not trusting no banks. I'm not trusting nothing. I'm trusting my mattress, period, right? But over time there's like but guess what? On the back end, now you have to do additional lifts to make sure you try to legitimize cash. I'm like, I'm not doing any of that. I'm not doing, like, our generation, hopefully, our generation, we're like, look, let's stop doing that. There's there are ways to do this in a smart way and not have the IRS like busting down my door or have to deal with any like none of that, right? Let's not do that way. And I think you taking on the jobs that you do, like for instance, those who are dealing with tax, congratulations. For you specifically, Fan, who are helping people, especially in our communities that are, they want to do better. They don't know what to do, how to get there. You know, what are the vehicles that we can use? How do all these pieces move together, right? Like, I think that's where this is why I wanted to bother you. This is why I kept pestering to say, hey, like, let's talk through this. Because I think a lot of people struggle, right? To your point, if you were to, how do I put this? What was it? If you ask any typical person how much they need to retire, I think it was something like a single-digit percentage of people who would even get within $100,000 of accurate. It's absurd, right?
I don't even know. If you ask me this question, I wouldn't be able to tell you. But I do have a number for winning the lottery, and then I will stop. And I will stop working. That's a number that, amongst my fellow CFPs, we talk about all the time. Okay, my number is 5 mil. Y'all be surprised. Oof. Like 5 mil is enough for me to retire.
Not for me, baby.
Yeah, and we just like, so that's the thing, right? Like if someone doesn't even know they're spending on daily basis and stuff like that, how do they even come up with a retirement number? That's impossible. But for someone who knows, you just know.
That's true. I mean, the one thing that just occurred to me, I mean, there's so many different ways for folks to calculate. And for me, this is the absurdity of the other side of the coin that I've seen. Like most of the people, I think we are assuming that it's like the underpaid, underprivileged, which for sure there are, right? Let me be absolutely clear here. But when we think about knowing your number, I think a lot of people, let's just assume the people who don't have those money set up, right? There are those people. It's easier for you to reverse. For me, I'm always a fan of reverse engineering. So if you know what that number is, and you can backtrack into it. Now there's clarity on what you need to do, right? As opposed to, I think this is weird because I think sometimes having that in place, it really does define. Okay, maybe it really isn't worth these 13 Starbucks for this week, right? Maybe instead of having 35, maybe I'll just have 12, right? That difference we'll put away in a bank, or maybe I don't need to buy the 13th pair of sneakers this year. Maybe I'll put that in my Roth 401 or my Roth or my 401k. Like there are trade-offs, and you could calculate this out. The other side that I see is the other extreme where people assume like, hey, what's your number? $30 million. Why? Because I want to live comfortably. Do you even know what that means? Right? Why do you need $30 million? And they backtrack. It turns out all I needed was 15. I'm already 3/4 of the way there. Okay, so you're torturing yourself now and stressing yourself out for what reason, right? So one thing that I'm curious if anyone's interested in trying it, if you haven't already, great. In my head I'm thinking Monarch, or if you want for the anal folks, if you want to try you need a budget or make your own budget. I don't care. Stitch it all together, all your expenses, and average it out, whether it's monthly, 6 months, a year. Me personally, I'll probably say try a year. I'm curious. Try a year. Break it out of all your expenses, and then maybe put in your I wishes, like this is what I want in my future life, right? And run it through ChatGPT and tell me what it says. I'm curious. Like, so let's say I'm assuming it's gonna have to it'll pull all your spending habits for the year, and like for me, I wish I could travel more, but I want to travel not like super budget. I want to travel comfortably, right? For instance, what would that cost? All that jazz. Price everything out. And I'm sure you have to put some other stuff in there to make sure it's closer to accurate, and be like, and tell ChatGPT, hey, I'm 39 years old, and assuming that I'm going to retire in my 80s, right? What is my retirement dollar amount? What do we need now? Break it out over time, and I'm curious to see what it comes out with. Chances are it's not going to be 100% accurate, so guys, please don't take this as gospel, right? But I'm curious at what that says. Sorry, that's a weird random.
I really love that.
Because
yeah,
there's I think there's, well, I mean, look, let's say you get him on number. For me, I think roughly, for me, I personally, I think I roughly estimate somewhere in the ballpark of like $10 million.
Oh, you need 10 million to retire?
Yeah.
That is crazy. I mean, good for
Well,
you. Also,
for
you
me,
live in New York. It's different.
yeah.
I mean,
And
like
so
Pennsylvania.
it's much cheaper.
Yeah.
And look, but that's the whole other side of it. Like I left wiggle room for variability, right? And the other side of it is I did assume that, you know, if I do live anywhere else, then yeah, that number comes out drastically. But then on the side of it is like if I look at the way things like it's personal, right? Because there are certain things I factored in that I assumed the culture was going to shift in the way of like how families are going to be and all this other stuff. So my math shifted, but again, I still have a ballpark. And the other side of it, look, you can chat GPT a lot of things. I would still recommend finding a competent person to sit there and walk you through your options so that they can actually model your actual situation, and piece it together. I'm assuming this is where you come in, right? Like I'm assuming you're not just sitting here throwing darts at a board at a plan like, hey, that looks like a good one. I'm sure you sit there like, so walk me through how this process works. If you onboard, like, let's say a new person comes in and like, hey, fan, I don't know what I'm doing. I don't know what I'm doing. I need help, right?
Yeah.
So like, what does that process look like for you?
Oh, I love that. Really good question. I start with the color of the darts, like blue, red, and then I usually throw, but like, I give it like a meter or two, like in distance.
Fair enough.
Anyway, all the jokes aside, right? First of all, I would say this, right? You as a CPA, your knowledge of finance is already above, like way above average. That's something that you need to recognize. Like the fact that you are able to tell people to input a certain level of information into ChatGPT, I'll tell you this, like I would say 85% of people out there, they're just not able to even ask those questions. Like, right? Like that's why in the beginning of the conversation, I say, like, if someone knows where they are financial wise, like they're already winning. Like most of the times people come to me, like we're talking about people who make like over $1 million in a year, right? Like those high income, either business owners or corporate executives. They come to me, they think they have good money and they're doing finance okay. They don't know where they are. They also don't know when they can retire. So I would say here's the process, right? If people actually want to know, that is, you come to me. If you don't have a balance sheet, a personal balance sheet, you are losing. Like that's the way it is, and I'm helping you to get it done. Like, tell me your income, tell me your like cash flow, right? That's a different part of things. But just tell me your assets, like your house, your mortgage, your loans, your liabilities, your insurance policies, your 401ks, your old 401ks, this and that. I need to know everything. And once I know, I probably will have to know your allocation, right? Asset allocation. How are you invested? If people are telling me, oh, I'm just in index funds, good. Like, nothing wrong with that. But like what, right? Where are you in large cap? Where are you in international? Things like that. I just need to know. And then we need to make everything better. Like our job is to poke holes on things that you do. Like if you go to a doctor, you come out of the physical and then doctor's like, hey, I draw your blood and you're ultra healthy. You don't need to like change any part of your diet and you're going to live like 100 years old or something like that. That doctor is giving you no value, but that's also impossible. I can tell everybody here that physically or mentally, there are things that we can improve on for our health. So is your finance. That's just the way it is. So for someone who couldn't even, like think about the questions to ask to ChatGPT, I would say it's really essential for you to talk to a financial planner to get those questions sorted out. And then, once we know those information, I think it's really for the financial planning team to do the work. I don't really think my clients need to know much about finance. All they need to know is they trust us and they know that we're capable. That's all they need. We ask questions, they answer, and we craft the financial plan, they listen. They understand their own benchmarks for money. We will, however, give people a number for retirement. Last time, for example, like yesterday I did a financial plan, someone's retirement plan come up with $3.6 million for their retirement needs, right? That's a number that we're looking forward to get to. With that number, their annual return on their investment only needs to be around like 6.5%. So that made them feel way better because they were like, hey, we really thought we need something like 10% plus on yearly basis to get to where we are. But if you're telling me after everything, we just need to net 6.5, that sounds way better. That sounds like a benchmark that I can do. Then, that's the value that we provide, right? Is that sure, we all know what S&P 500 is, but like, why are you pursuing that, right? Like if you can have your own personal benchmark. So with that number, with those answers, those questions answered, we're able to just tell people what to aim for, what to work for. And then, yeah, if they do it, they are gonna double their money every 7 years. If they do that, they're gonna retire comfortably, and they're able to just travel overseas without needing to look at their accounts. So, yeah, that's the value that we bring, right? So.
I like it. I like it. I like it. All right, so I'm definitely gonna have to poke your brain a lot more, but in the meantime,
Yeah,
for
I'm a
those who are
smart
curious,
cookie. Like people don't recognize. Or maybe I'm a smart, I don't know, what's an Asian bakery that people like?
smart bow.
That's not delicious enough. Like I can be I don't know, like mochi? I don't know, like
Ooh.
right? Like so
Smart mochi crew.
right? Anyways, yeah, like yeah, it is what it is.
Well, I mean, for those who actually want to get an initial consult and need help with this and a third, like where can people reach out to you?
So our website, libertyonewealth.com, right? Or just Google me. I don't know, like talk to me on LinkedIn. Like 3 weeks ago, I started to be active on LinkedIn again. I started to post videos, and for next week, I think my video topic is on like Costco. What Costco teaches you on like, I don't know, financial planning, which is really cool, really smart. So like follow me on LinkedIn, and we can chat.
Well, I'll leave the links and details in the description. And in the meantime, for everyone out there, thank you for your time, and I'll catch you guys at the next one. Peace.
Yep. Bye.